Pilgrims, Guy Adami here, 1 p.m. Eastern Time, market call. That's Dan Nathan, all in black. Johnny Cash. I went to the Johnny Cash Museum with my wife in the spring in Nashville, Tennessee. I endorse it. I think everyone should go. The Man in Black. I will say that Joaquin Phoenix, I believe that's his name, his portrayal of Johnny Cash was, he should have won an Oscar for that. I don't know how he didn't. I think Reese Witherspoon might have won something, but I digress as I typically do. This market call, Dan, brought to you by FactSet Financial Data and Analytics, powered by Tomorrow. They also happen to be our data provider. In literally 9 seconds, because that's the type of show today is, we're going to bring in Carter Braxton Worth of Worth Charting, because he's got it all going on, Dan.
Yeah, he does. And just by the way, this is navy blue. I was wearing black, I think, yesterday. It's fine, guy. You know, you're colorblind a little bit here.
I mean, you know.
Let's bring Carter in right out of the gate here.
Yeah, because, bring him in.
Kind of like we're getting into the thick of earnings here, and Carter spent a lot of time doing a lot of work on Microsoft this week, and we want to talk about that a little bit. CBW, welcome to the opening of Market Call. How are you, bud?
Hi there. Good. I'm good. How's
all right? Let's do this really quickly, because I think this is important. You know, we have a few day chart here of Microsoft, and you saw the stock was rallying into its print here after the close. You know, we were dissecting the report guy on Fast Money last night in that 5 o'clock hour, and we saw the stock up 4%. I think you and I were both saying, you tweeted it was a great tweet. It's like, wait for the conference call. You didn't even say what stock and what you were talking about. We talked about Microsoft yesterday. I think both of us thought that if the stock were to rally, we thought that it would probably get sold at that downtrend. Well, when the company came out with a guidance, you see that reversed that entire aftermarket move. And it was trading down 4% earlier today. It's rallied back. Carter, talk to us a little bit, because I think this is really interesting. You know, I obviously, one of the first things that I read every day is your Worth Charting note on Monday's top of mind subscriber video. You spent the whole topic. You spent the whole video on Microsoft. And then yesterday in your institutional catching up with Carter call, all you did was focus on Microsoft. Why was Microsoft so important to you? And then I want to get Guy's take a little bit, because NostrAdami was at it yesterday after the call and saying this thing was going to fail.
Right. So let's see. Typically, we try to cover multiple subjects, as the three of us do here, and you do every day. But when something's particularly important, Microsoft being the second largest stock, and it did out of earnings, I thought it would make it the single subject of focus, not only for the Worth Charting subscriber midnight video, but the following morning on Tuesday for institutional clients. And what the point of that was, obviously it's important stock, obviously it's weighting in the S&P, but also just how bad its setup was. And so with a little bit of luck, the stock is down. But here's the thing. At this point, you have a whole plethora of circumstances, individuals who were long or got long right after the print and now have a massive mistake on their hands. People who, after it printed, didn't do anything, and then when it was down this morning, shorted it, they got a mistake on their hands. Now it's rallied back. This is a treacherous kind of moment. I think the takeaway, regardless of the fact that it was up 4 or 5 after the print, then it was down 4 or 5% today, now basically the real takeaway is, forget about all of that. From here, is this an interesting circumstance? Is there immediate upside potential or downside risk? No. We've got the facts. There's been price discovery. People buying up 4 or 5%, people selling down 4 or 5%. And now the truth is, this is sort of a dull, dead asset. Would you go and commit a big amount of capital, say, I got to get long here? Based on what? Or this is it, man, short this thing. Based on what? Right now, there's no trade. This is what a pair of twos is.
Yeah, it's interesting, Dan. I happen to agree with that. I mean, I think, first of all, shorting stocks is always a difficult thing. We actually talked about it on Market Call yesterday. We thought that sort of $12 move that you outlined in terms of a 5% move based on what the options were saying could take us up to 250, which would take us right to the downtrend line. And that sort of did play out. And we also said, wait for the conference call. The only reason I would have even known to say that is because back in June, when they reported, I think it was June 16th or thereabouts, don't at me if I'm wrong by a couple of days, but the knee-jerk reaction was to take the stock down significantly, I think to the tune of about 4 or 5%. And then the conference call happened and we were off to the races. So I thought you could see similar yesterday. only reverse. You could see that upside move off the initial earnings release only to be followed by a sell-off during the conference call. And that's what we saw. In terms of how you're trading the stock going forward, I understand that most people are going to play things from the long side. I just don't think it's worth being long the name right here. If you really listen to the call and listen to some of the things that were said, and again, listen to the comments that Satya Nadella made a couple of weeks ago in India on CNBC Asia that you had actually listened to and talked about, it doesn't paint a particularly rosy picture. And even with today's move, even at the trough of today's move on valuation, it's still an expensive stock.
Yeah. So here we are. We're in the middle of this fiscal 2023, year for Microsoft here, and we're expecting high single digits earnings and sales, and it's it's trading about 25 times. I mean, to me, that seems really expensive. I said this yesterday. I think that before it's all said and done, the stock probably gets back towards 200. Carter, walk us through the charts. You brought some with you on the Microsoft here, and again, right now it might be a pair of twos, but if you're in my camp where you think that there's going to be further deceleration in some of their really key businesses, the things that are allowing it to have this very premium multiple to the market and many of its mega cap tech peers, I just don't think this is a 1 quarter event. And my friend Doug Cass and I were texting, or we were DMing. He slid into mine, and then I came back to his this morning. He brings up this point, and I've made this point a lot too, is that in the .com bust, a lot of people thought that some of these bigger names were going to be immune to some of the wreckage that for these non-profitable names, right, that were serving a lot of startups and the like, and again, those names ended up getting hit as the second derivative when all of those companies went out of business or they slashed budgets, that sort of thing. And we might see that in 2023 for a name like Microsoft. We might see that weakness in AWS over there at Amazon. You see that the knee-jerk reaction was for Amazon to be down 3% also. So Carter, walk us through a little bit of Microsoft and where you see this thing playing out. Again, maybe it's not a trade right here, but what are the charts telling you in the balance of this year?
Well, that's right. So in terms of the longer time frame, there's every possibility and opportunity to bet short, to be underweight. But I thought we could just draw the lines. Now, one would agree that up is up and down is down. If no one can agree on that, then obviously it's a trip to the ophthalmologist, right? We know that the stock was in an uptrend, as annotated there, and there is the downtrend. Let's toggle back and forth, uptrend, downtrend. So put them all together. Now we combine them. Okay, generally speaking, well, you don't have to ascend or descend in a channel. That is the case for Microsoft, and we're sort of just sitting here, hence the pair of twos judgment. But what is not a judgment, which is factual, we're still in that downtrend, right? And so the question is, I think it's either no discernible trade here or have a longer term view, as you're articulating, Dan, to basically be not in the stock. Now, this is a relative chart. So this is Microsoft's relative performance to the XLK. Now, look how bad that is. This basically, it peaked 3 years ago. It's rolling over. Let's put a trend line in instead. So instead of using the moving average, toggle, right? Trend line, moving average, trend line has all the elements of a bullish to bearish reversal, a big rolling over. And again, that's Microsoft to its peers, XLK, of which it's the second biggest weighting, along with Apple and other big names.
Yeah, and it's interesting. I just go back to valuation. Still, listen, I've said this, I believe it. I think it's one of the three, if not, 3 or 4 most important companies in the world in terms of their businesses and who they touch. And to your point, Dan, it's not just a 1 quarter thing. I mean, typically the cycles are pretty long for names like this. And when things start to turn lower, it lasts for a significant period of time. And it's interesting, Senator Geary here, if you want to pull up 105, by the way, always good to have Geary. Google's a bigger story than Microsoft, down way more. Here's my pushback. I think much of the Google thing, to a certain extent, is Google specific. Microsoft is such a important company in terms of all the industries that it touches and in terms of what it's telling you about the economy. That's the reason why I sort of harp on Microsoft, Dan.
Yeah, I guess the other point is that when you think about Google, they have their Google Cloud. They have a lot of these kind of, the productivity tools too, right? And so, Microsoft is seeing that slow too. And Google is a huge, they service a lot of very similar companies like we just described that, are going to likely see, budget cuts and they're cutting workers. And so when you think of kind of cloud-based services, they're going to get hit too. So I think Geary makes a good point point there. So we'll just throw all those names into the mix here. Carter, your note out this morning caught our attention. You said, get your popcorn. It's showtime here. You're looking at the S&P 500. Again, we've had 15% of the S&P 500 earnings. And if Microsoft, I think at least as far as the expectations in the print, the stock ran up into it. And then you just saw after the close, people wanted to be positive. But then when they got the guidance, the realization is that it's going to be a tough slog. Talk to us how this resolves itself in the S&P 500. You've been charting this here. We know that we've got a series of lower highs. We've also now had a higher low here in the S&P 500. So we're making a little bit of a flag or a pennant or something like that formation. Talk to us about the S&P 500.
Sure. So it represents almost a perfect instance of equilibrium where buyers and sellers are matched off. No one is in the ascendancy. Typically, right, in a big bull phase, bulls are in control. In the ascendancy, in a bear phase, the bears are in control. And now we have equilibrium. And in many ways, it could just be that the market belongs here. But if you look at these lines, they are very precise. Look at some arrows if we put these in just to annotate it. We're at the end of the runway. There's no more time here, right? And so even sideways would resolve it in the sense that if you keep going sideways, you will be outside of the apex of the formation. My own bias or hunch is that we go lower, we break to the downside. But I think really it gets back to, and I'll just repeat myself because it's sometimes you can, it's choose your own adventure. Which do you think? But I think, again, 85 to 95% of the odds sideways to down captures 85 to 90%. The case for up, it seems muted. And here's the other thing. You often get bull traps. Let's say we go above the line a little bit. And you draw in a lot of people only to have it crap out, as the expression goes in the casino. I just don't see up and up meaningfully as a scenario that's likely. So sideways to down, I think, captures the preponderance of the odds.
I'm with Carter. I think we've been pretty clear on that. This is this pennant formation. And listen, you could see sort of that false breakout. We've seen it happen in other things before, and I think you'd probably suck a lot of people in. But the importance of Microsoft cannot be understated. Obviously, we're going to hear from some other companies as well. The market's still expensive. And on top of that, we had Marko Kolanovic on last night on Fast Money, who, people will say that he's another one of the perma bulls out there. It's factually inaccurate, but, he had been bullish for a period of time. I mean, that was about, Dan, as cautious as, well, it's probably about as cautious as he's ever been since we've known him in the market. And you think about the role that he plays at the bank that he works for, JP Morgan, to make a call like that, and in a word, is pretty ballsy. So, I think you have to listen to what a lot of these folks are saying.
Yeah, well, listen, make no mistake about it. While I also lean to the downside here and position that way, it's kind of been a little bit of painful. I think many of our market call viewers know that I've kind of detailed a handful of my bearish trades in the options market over the last couple of weeks, and basically all of them are losing. I detailed a QQQ put spread in February expiration. I was looking at the 285, 260 put spread. It cost me a little less than $5. That's a 25 wide, and that's 20% of the width. And so that one's a little bit in the money now with this thing. I'll just say this, though. I mean, the Microsoft action, Microsoft could close unchanged on the day. That's not bearish. I mean, let's just be clear. The company narrowly beat lowered guidance, and then they guided lower, and the stock has been, in a big range, since the aftermarket. And then this morning, the fact that it's down less than 1% is not bearish, in my opinion. That's not bearish price action. So the QQQ, though, to me, is the one that I kind of want to lean on. It just feels a bit heavier, especially when you look at the knock-on effect of like a Google down 3% and still down 3% today. All right, real quickly, Carter, before we get you out of here, we appreciate your time with us today. Tesla, last week, before it really took off, you made a bullish call there. You thought it was a little overdone here. Walk us through that. Reports after the close tonight. We know that there's I don't know, I want to say 6 or 7% implied move. There's news hitting the tape right now. The Wall Street Journal is reporting that Elon Musk, the CEO of Tesla, who's also the CEO and sole essential owner of Twitter, is looking to raise $3 billion in fresh equity for Twitter to pay down that debt. And so I guess the perception here is that the more equity he could raise to pay down the debt that he is on the hook for at a company that is declining, that's the less likelihood that he is going to have to sell Tesla stock, which has been weighed, obviously has been weighing. He's been selling billions of dollars worth of stock over the last couple of months. Talk to us about the technical setup, and then Guy, let's me and you kind of kick around what we think happens as far as their earnings, their guidance, and what's in the stock from a fundamental standpoint.
Sure. So, well, to be fair, not such a great call. I mean, this was a short for us up in the 280-300 range, and that was stuck with that. At 138, we flipped that around and said, let's go long. It went as low as 104. Now we're back at 144, a little above where that. Here's the question. It's a very well-defined trend line. You can see it. Do we break above it? Do we breach it? Or do we falter? I think we go above. Let's look at the next iteration here on the chart. You have a minor head and shoulders bottom. That's the reversal. You can draw the lines a different way. You can see this. We have this tighter and tighter sort of coiling. I think we get a pop, and that could well be the end of the ricochet. My hunch is that the ricochet, in effect, since the low of 104, has room to run.
Mm-hmm. It's interesting, Dan. I don't know necessarily if fundamentals really matter all that much, but I think what does matter in terms of Tesla is the market sentiment without question. On the way down, I think a lot of people realize that, wait a second, even though I didn't realize I was long Tesla, vis-a-vis the fact that I'm in these mutual funds and these index funds, I actually am long Tesla, and they felt the pain. So I think a lot of people woke up to the fact that Tesla was down some 65 or so % from its all-time high. I think the bounce has sort of assuaged some concerns, but I think it's somewhat short-lived. Now, Carter might be spot on here. You might get that blow off top, which sounds ridiculous given the huge sell-off we have, but you might see that sort of exuberance post-earnings. I do think it'll be short-lived. So the way I would trade it, Dan, is if, in fact, that happens, if you get that exuberance, I think you lay into it if you're long, maybe sell the double. But if somehow it fails here and they put out some disaster, I think it's almost a foregone conclusion that we take out that sort of 8 level, or the 103 or 108 level that we recently bottomed out at.
Yeah, and I'll just say this. So the implied move in the options market is nearly 9% in either direction. So the at-the-money straddle, we went over this yesterday. If you took the 144 call premium, the 144 put premium, and the weeklies, you add it together, you get about $13. You divide that by the strike, you get about 9%. So that's what you would need in either direction if you just wanted to be long the move, and then 4.5% in either way if you just wanted to pay $6.50 basically for the put or the call. It doesn't seem like that would be that hard if you're convicted, right? If you thought this stock was going to rip, risking about 6.5%, that's a binary trade here. As far as the fundamentals are concerned, I just think that, China is a real problem for them. I think that they have less than 10% market share of the EV space over there. They have some huge Chinese competition. And obviously they're reliant on the Chinese for manufacturing, Shanghai Giga. They need rare earth materials over there for the battery. I mean, the list goes on and on here, but that doesn't mean the stock can't continue to rally, because it seems like, like every headline in the last 2 weeks has been a positive headline after 2 months of just disastrous headlines. The stock got cut in half, I think, from, November down to its lows. I think it got to a 102 or so. So to me, this is kind of a no touch at these levels. I am long puts. They are basically worthless. I was a little too early in this trade. But again, I'd really like to see what they have to say. I know this is going to sound controversial. I just don't think they're going to be honest about their guidance, given what we think is going on with the global economy. And I know that all those price cuts that we saw in China, that can't speak to the fact that there's tremendous demand over there. And I think they're going to have increasingly competition over here in the US. But to me, I don't know, maybe I'll put something on that's risking what I'm willing to lose. Carter Braxtonworth, thanks so much, man. All that heavy lifting on Microsoft, S&P, QQQ, and Tesla. We will check back with you very soon. Thanks, bud. We appreciate it.
Talk soon. Bye.
All right,
Love
Guy.
Carter.
And let's just put a bow.
By the way,
on
it's
this.
great seeing the three of you, the OG. What do they call original gangsters or something?
Yeah, OGs. We were Mike Coe, myself, and Carter were on Options Action Friday afternoon. I have not been on that show in a little more than 3 years, but we were all on that show together for 10 years. Carter and Mike still do it with Melissa Lee. They do a great job. It was my sincere pleasure to be back on with them for a Friday. Let's just put a bow on this Tesla thing. And I think it's interesting, Guy, that this literally just broke this news from the Wall Street Journal that supposedly Elon Musk is looking to raise $3 billion. He was on the hook for maybe 13 billion or so in debt. He was selling a ton of Tesla stock. Okay, so that's in Twitter, a ton of Tesla stock to help fund the closing of that deal from a few months ago. The stock, he was selling it down. I mean, again, look at how aggressively had been selling the stock. There was rumors in the information that the quarter in revenues were down 40% this is for Twitter.
Yeah.
Private company. Okay. And so again, if they were going to miss those debt payments because they can't cover that, he's going to actually have to take down that debt. So there's a couple ways you could do it. He could sell stock in Tesla, right? Or you can try to raise equity in Twitter. But the point is, if you have revenues down 40% in a quarter, I mean, what do you think that equity's worth? He paid $44 billion for this company, 13 of it being in debt.
A lot of people thought the right number was closer to $14 billion. And who knows what it really comes down to, what will the market price it at in the private market, right? I have no idea, but it certainly is not going to be at the level that he bought the company for. And he's gotten himself, it's one of those things. There's no clear path out as far as I can tell. I'm not a banker. I don't do debt capital markets, but it's clear that this is somewhat problematic. So to your point about not being able to make the debt payments, something has to be done. And one has to wonder, what levers are left to be pulled. So, we're not bearish in Tesla. I'm not. I don't want to speak for you, but at the sake of being bearish, what I'll say is, we got resoundingly bearish in the stock Tesla when the first foray into Twitter came across the news wire. And I think it happened during Fast Money one night. And that's been the right course of action. And, this 40% or so rally off the bottom notwithstanding, the stock is certainly not out of the woods yet, in my opinion.
Yeah, listen, you just made a really good point. I've gotten dozens and maybe hundreds of tweets of people saying, you just hate Elon. It's the politics, this or whatever. No, man. I mean, that's the point. When he bought the hubris that he was going to pay $44 billion himself to buy this asset that was not worth, to your point, $20 billion. And I said it that time in April on Fast Money. I said, Tesla shareholders are on the hook for this. Okay. That was a massively, massively bearish thing for this whole story. And when you think about the competition, you think about the potential for a recession, you think about interest rates going up, the list goes on and on and on. So I remain bearish. I think we were right over the last year. I was wrong the year on the lead up to it, but I think I'm going to remain being right here. I'm going to keep kind of trading this thing from the short side. So it is what it is. All right. Here's a text or a tweet from somebody, Guy, Hank. It's
Hank.
Yeah, somebody. He says, I know you guys lean bearish, but this morning's 200-day moving average test is not bearish behavior. Actually, the way it's recovering now is hard not to be bullish, and we are no longer overbought. That's fine. We just recognize that. We agree with you. The price action, we're saying it. I mean, I'm not going to turn my positioning just because, the S&P touched a couple lines here and there. I want to continue to see what the fundamentals, and this is really important, guys. So let's talk about this, okay? This is Charlie Bolello. He's kind of, if we throw this slide up right here, he's talking about all these different commodity prices, and these are big inflationary inputs. And so you see where commodities are, the changes year over year. Again, I was in that transitory camp. I was wrong. The Fed was wrong. I mean, really depends in 2021 what your definition was of transitory. I think if you look at all this, it's pretty clear. It was transitory. It just happened to go longer, than people thought. And I guess what you would say is the Fed's problem is that they stayed too easy in the monetary policy in light of that here. Okay. And so again, it's just semantics, but the fact of the matter is that there's a lot of this sort of economic inputs that are suggesting that things are getting a bit easier. So maybe the Fed's been winning, and you've actually given them credit for staying the course and getting to nearly 5% in Fed funds and doing the job that they're meant to do.
Yeah, I agree with that. I mean, are they winning? I don't know what winning looks like. Unfortunately, I think winning will be having to break a few things along the way. But in terms of the input costs, things are trending their way. Good for them for finally acknowledging that there was, in fact, a problem. It just took too long. I never got into the transitory commentary because it's such a bullshit word if you think about it, because everybody's time duration is different depending on what you're looking at. I mean, and if you really want to get down to brass tacks, to your point, by the definition of the word, they were right. It was, in fact, transitory. Unfortunately, I think their version of transitory at the time was just a couple of months. It obviously lasted a lot longer. But with that said, I mean, I don't think, and other people have pointed this out, and I'm not an economist, but I just don't think we have felt nearly the effects of this tightening cycle at all. And I think we're just starting to see it in terms of some of the commentary you're hearing out of companies and some of the layoffs around the edges. I mean, you mentioned Triple M yesterday, but it's happening all around. And again, that does not turn on a dime either. And it typically gets worse before it gets better, which again begs the question, what's the right multiple in this environment and what are earnings going to be? And that's not me just saying it. That's people like Mike Wilson, and that's people like last night when we heard from Marco. So, take it for what it's worth. I think if you just do the math on this thing, a reasonable level in the S&P 500 is in fact 3,400. And then we'll see if you get an overshoot. The fact that the market is holding in here absolutely is impressive. I'm not sure really why that is, but yes, I'll tip my cap. It's been impressive price action over the last couple of weeks.
Yeah, and I think the main point there is that unemployment, and we're still at that kind of 3.5% bound. That's the pre-pandemic lows. That's a 4-year low. And so if we see that starting to tick up meaningfully, that will suggest that a recession is probably much more likely than that soft landing consensus narrative that's been building of late as the stock market's been rallying. I just want to pull up the Bloomberg Commodity Index here because to me, this is a horrible looking chart. And we know that, you can see what makes up this thing. It's a lot of crude, it's natural gas, it's some industrial commodities here, but it's below that uptrend that's been in place since the start of 2021. That it had that retest of the downtrend. It looks like it's going to be rejected there. So that's one to keep an eye on. And again, you would say, is that bullish? I don't know. You might ask that question. You might say it's really deflationary also, right? And so maybe that is speaking to weak demand, right? So who knows where we are right there. But I want to get your quick take on this one, guy. This is from Lisa Abramovitz over at Bloomberg. And she tweeted this yesterday, and somebody highlighted this to me, and I saw this yesterday. But the Bloomberg U.S. Financial Conditions Index ended yesterday at the most positive level since February. On one hand, this shows a shift in sentiment that's helping to thaw previously frozen capital markets. And on the other, this was a concern that the Fed is still facing off with high inflation.
That's right.
The exact point that you've been making here. And again, this is the battle that's going to play out between the economy and the markets. And why do we bring some of this stuff every day? Maybe it seems a bit redundant, because that's how we're going to figure the path out of this bear market, is just kind of getting some of these inputs right.
That's exactly right. And again, picture worth 1,000 words. Correct. I mean, things are better, but when things get better, it makes their job more difficult. So, I hate that expression, but it's sort of the whack-a-mole thing. Maybe they fix one problem, but by fixing one, two more emerge. And I think this chart or graph or whatever it is speaks to exactly that. And that's the concern that I have, that once the market even sniffs that they're done or they're going to take their foot off the gas, personally, I think it's going to unleash another wave of inflation that they're subsequently going to have to combat. And I think they understand that as well, which is why they're so steadfast and dogmatic in their views. Real quick, sorry about this, Dan, but somebody's asking me, and maybe we can pull it up. I think it was, what's his name? Called Matrix. Matrix just asked, if you can pull this up, what's my secret recipe in my sauce? I don't know if we can get that up. I know he's asking me to pull a Clemenza here, but I'll tell you, a little red wine and a little bit of sugar, and that's my trick. Back to you, Dan.
Oh, I love it, man. That's great. And you've never made that Sunday sauce for me.
No,
maybe I'll
that's
get
patently false. Actually, I will tell you that the sauce that I make is exquisite, and my homemade meatballs are.
I've just never tried it.
I will tell you, my mom, who passed away, and she's probably somewhat biased, although, I think she was being honest as well. She said my meatballs were the best meatballs she'd ever have in her life.
All right. Well, I'd love to. I'd love to try them. All right. Real quickly before we get out of here, one last thing. Our friend David Rosenberg over
Rosie.
And this is kind of along those lines, not along the meatball line, but what we were just talking about. So this morning in his note, he said the leading earnings and economic indicators continue to flash warning signs ahead, meaning that these bear market rallies are not to be rented and not owned. The rising prospect of a very prolonged war in Europe is unlikely to offset macro impacts from the pent-up demand set to be unleashed from China's reopening. I think that last point, Guy, is really important. We've talked about that a little bit. And again, might they kind of cancel each other out. And then if the US were to go into a recession, Europe was to go into a recession, we might find ourselves, in a situation that feels a bit stagflationary, even though a lot of those inflationary inputs are coming down, the dollar's come down, rates have come down. But even if we are at levels very elevated, to, let's say, in yields, you know what I mean, year over year, that sort of thing, and we still have some prices that are still elevated. We still have wage inflation. I mean, that's the other point that has not moved at all. So just quick thoughts on that, and let's get out of here. We have an important announcement also, guys.
Flashing red. When you see people, again, these are not dogmatic people. I mean, these are individuals, excuse me, that take in the information, dissect it, analyze it, synthesize it, then come up with their conclusions. So, people will say Rosie's always negative. That's just not true. The same way that Marco being bullish is not true. And Mike Wilson could not be more down the middle. And again, he reiterated his bearish stance yesterday for all of these same reasons, the reasons that Rosie points out here. This is not an easy situation to extricates oneself, in this case being the Federal Reserve. And there's just a lot, in my opinion, there's more pain. If this was, let's put it this way, if the peak pain we felt was that move in October in the equity market, given the largesse over the last 12 years, then that sort of opens the floodgates for Fed policies to be as reckless as they've ever been before, because there are no ancillary or knockoff effects. I just don't think that can be the case. I mean, the economics books that I read, at least, don't lend themselves to that type of outcome, Dan.
Fair enough. All right. This is really important. We're going to keep reminding our market call viewers to do this. And if you're on here right now and you're listening to this right now, we have February 8th. We are with our very fine partners, FactSet, at 11 a.m. Eastern. Guy and I are going to host some of their experts for a 2023 outlook. We are going to look at earnings, energy, and ESG. We're going to be joined by the man himself. Guys, say it.
Just say it. Butters. I mean, hear the way I just said it in hushed tones. Butters. I mean, that's because you don't have to say it. It's like Sting.
Yeah. Well, so that is John Butters. He's the senior earnings insight analyst who was on our fine program Market Call not too long ago. We're going to be joined by Matthew Haggerty, Eli Reisman. So that's going to be a live stream. To get that live stream, please go to riskreversal.com/FactSet 2023, and you will get the link. All you have to do is kind of put your name in there. So please do that. We want to see you there. This is going to be a great conversation with three of FactSet's fantastic experts. So join us on February 8th, 11 a.m. That's riskreversal.com/FactSet 2023.
I'm looking forward to that. It's actually, we did one a year or so ago. It was a great conversation. We got a lot of engagement on it. I'm looking forward to this one as well. So please join. Tap, what do you say? Tap the link or smash the link or
smash that link. Just put your name in there, smash the link, and you're going to get the streaming link, and you're going to join us on February 8th, 11 a.m. Eastern. Thanks.
By the way, Knicks, good win last night against the Cavaliers. Good Cavalier team, by the way. The Knicks got off the schneid. They needed to do that at home. They have not been good, Dan, as you know. Congratulations to Scott Rowland getting into the Hall of Fame in baseball. A lot of people don't think he's deserved. I tell you what, he flashed the leather at third base. I think he's a career 280 hitter. Want to say he hit about 340-something dongs. I understand why people would be a bit exorcised of him getting in. I'm not. Watch the video of him breaking the news to his mother and father. You will shed a tear. Original 6 match tonight in Toronto. Rangers Leafs. I'm looking forward to that, Dan. I know you are as well on a Wednesday night. But that's it for Market Call. I want to obviously thank our audience. Thank you, Carter Braxton Worth. I want to thank FactSet, financial data and analytics powered by Tomorrow. They're also our data provider. As we mentioned, Dan, we'll be back tomorrow, which will be Thursday, with who?
She's not here tomorrow, guys. So
what?
Maybe we'll get it. Maybe we'll try to find a special guest.
We'll be back tomorrow. She ain't going to be with us. Tough toenails, people, but we'll make it fun regardless.
We'll make it fun. All right. See you later, guys. Thanks everyone for joining us.